Welcome to Invest. We talk about investing, finance, or professional development. It's the recording time of 10:29 a.m. on Eastern Time. So I have about 30 minutes before my next meeting. So I just want to talk about stocks real quick, knowing the fact that we had that slight surge on the equity side, rebounding from the sell-off that we incurred yesterday ahead of the CPI report that came out. So as we know, the CPI report came out to be less than expectations in terms of the severity, and there are some like media affectation talking about that inflationary pressure might have peaked, or is around the corner that we're peaking already, so driving some optimism among the market. So I know I talked about crypto earlier today, so let's just dive into equity as well. So right now, with respect to Dow Jones, it's kind of flat at this on the sideways fashion. We are something that is great is that we have crossed down on the depth cross front. So now we are kind of consolidating. At the same time, the RSI is bounced from the 50 or the 47.75 out of 70. And at the same time recuperating the momentum back up. So I would say, we are normalizing. At the same time, it's great that the MACD is already crossed down, allowing for a preliminary golden cross to be formed later as we get more momentum going. So I do like the setup. I do think that the CPI report, that came out today was like kind of rip off the bandage type of affectation. It got us, a little bit fear mongering ahead of the actual report come out. And obviously with the report came out, it gets some optimism. So to continue the bullish momentum would be, a higher probability than actually continue to sell off from there. In respect to SPY as well, we are doing something comparable. You could see that we crossed down recently. At the same time, we're recuperating from the neutral level. So I do like it that we might have seen probably the worst already, knowing the fact that the market has been trying so hard to adjust in all the negativity. So I would say we are pretty much near bottom across the spectrum. Do we see more sell-off? I think we already seen the worst based on my assessment on the overall market dynamics. Respect to Tesla, right now we are bouncing from the 40 out of 70. So I do think that, knowing the fact that we crossed down, knowing the fact that we pumped up really, really, severely to all the way to 75 out of 70 when we were at the $1,115 at one point, selling back down right now, recuperating back up the momentum because of the previous resistance level. Right now is actually not a terrible level. I mean, if you bought in, days ago when we were at 975 earlier, it was a good dip, right? Because of that, that's the resistance level. But for me, if you think about buying for the first time, with some lingering factors around the FOMC meeting that's coming up in May, we still have the PPI report that's coming out tomorrow. And I think May could be an interesting one. So, but ultimately, I cannot predict the future or the timing. But in terms of risk dollar cost average level, I think right now it's not terrible, but not the best. But I prefer anywhere from 900 below, obviously. In respect to NEO, NEO is trading at a good level. We are 45 out of 70. I think the worst is already kind of adjusted in, like $13. That just doesn't make quite much sense to me. At the same time, we have crossed down on a depth cross front. And at the same time, we crashed down yesterday because of the severity of the fear-mongering that we had. And also that was the point when inflationary pressure was the highest and the rate was the highest as well. We were at the 1775 level for like a brief moment for like about half a day until rebounded. And today you could see that we opened on like $20 because of the optimism from the CPI report. So I do think that we are normalizing, we crossed down, so that was a necessity that we need to do to continue the bullish trend going forward. With the 45 out of 70, so right now it's actually not terrible, right? Coinbase about 2.6%, and you can see that Coinbase clearly bounced from 150 for several times now. You can see that once, twice, 3 times, 4 times, 5 times, 6 times. So I think 150 at the 30 out of 70 is a buy right now for Coinbase. I think we are pretty much rock bottom on Coinbase right now. BABA, it's good. I really love this level for BABA. And at the moment right now, the 42 out of 70, we crossed down, which is a necessity. We need to cross down on a depth cross until we cross back up again. So I do like BABA because of the valuation. Is just like we trade on like an 85-75% off for this stock. So it doesn't quite make sense to me why it should be trading this way. But obviously, it's a Chinese stock. At the same time, the COVID situation in China right now. So I think buying BABA and hold this for the next 5 years, it's really a no-brainer. I think this is a 600% gains from here. I think BABA should be trading comparable to how Amazon is trading right now. Even though they're like the same size, and BABA is actually growing faster than Amazon as well. But it's just that it's because it's just Chinese stock, right? So that's why it doesn't get the most favoritism, right? So I would say the bottom is pretty much in for a lot of the stocks, and that's just my gut feel. Do we see 1 or 2 days more volatility? I mean, this is like something that's expected, but in terms of like in proximity to the bottom, I would say yeah, we are definitely in. So appreciate you. Hope this is helpful. It's a short one. Doesn't want to be. I don't want to like talk your ears off, but hopefully you understand my perspective. And appreciate you guys and have a good day. Take care.